Secret isn't just buying the land.
Because finance determines whether you control your land or whether the land controls you. Smart finance lets you hold through various cycles, release equity for the next purchase, and then sleep peacefully when the interest rates move. Debt isn't the villain. Unmanaged debt is. Treat debt as a tool. Don't treat it as a trap.
So guys, welcome to our next episode. So this one, we are actually trying to make a long content. It's gonna be a little bit long, so stay tuned with us and keep watching. So we're gonna talk about farms again with Sean. So he's experienced in a farm sale, he understands, and he tried to teach us, everyone. So we're gonna talk more about the farms today. Sean, so thank you very much for coming today again.
Thank you for having me, Jatinder.
So let's talk about smart finance for farm investors. So we're going to talk about how finances work and what should the buyer should do. So again, welcome to our farm investment strategy with Sean Archer. So we are here to explore how smart investors build their wealth from the ground up. I, Jatinder Singh Ashad and joining with me is Sean Archer from Greenfields Real Estate. Sean, so every big farm investor, I know they say the secret isn't just buying a land, the structure of finance correctly. Why finance is so critical?
Yeah, absolutely. So, because finance determines whether you control your land or whether the land controls you. Smart finance lets you hold through various cycles, release equity for the next purchase, and then sleep peacefully when the interest rates move. Poor finance forces panic sales.
And what about understanding the type of loans? Can you walk us through the main finance options, Sean?
Yeah, absolutely. So we can start with commercial loans. Best for income producing farms. And the rates are slightly higher, but the terms are flexible. You can also offset interest with lease income. Rural residential loans for smaller hobby farms under 100 acres, often at home loan rates. Agribusiness loans, structured for operators. Banks assess cash flow from the crops or the livestock. Then we have private equity or JVs, joint ventures. Useful for when a group of investors wants to buy a large parcel and a bank won't fund it entirely. Each product has its own risk and paperwork. Always match your loan type to the land usage.
So thank you, Sean. Let's talk about a loan to value ratio. How much deposit does someone need?
Yeah, absolutely. So for rural land, expect 40 to 50% LVR. Banks lend less because farmland is specialised. But once rezoning or subdivision potential appears, valuations rise and LVR can be negotiated. The key is to treat equity like a renewable resource. Recycle it, don't exhaust it.
Let's talk about the leverage done right. How many investors fear about debt?
Yeah, I guess a lot of investors do, but debt isn't the villain. Unmanaged debt is. So imagine buying a $1 million farm with $500,000 equity. If land appreciates 8% a year, that's 800K growth on the $500,000 cash. 15% return before rent. Leverage magnifies results, but only if the cash flow comfortably covers the interest. Set a safety buffer of, say, 3 months, 3 months of repayments in reserve, and fix part of the loan to stabilize the costs.
Thank you, Sean. So let's talk about income servicing and leasing. So how does, Sean, leasing help with the finance approval?
Lenders love predictable income. A signed 5-year lease from a farmer or an agri-business can boost borrowing capacity by 10 to 20%. It turns speculative holding into a performing asset.
Thank you, Sean. And the equity release strategy. So once land grows in value, how do you use that growth?
So I'd say through refinancing would be your best bet. For an example, let's just say you bought at $800,000. Now it's valued at 1.2 million. That's a 60% LVR means you can now access $720,000. You owe $480,000. That's $240,000 equity you get to reinvest. If you don't sell, you get to scale. And that's how portfolios multiply without extra savings.
Thank you, Sean. And Sean, I want to ask you common financing mistake.
Relying on city brokers who don't understand the farmland. Yeah, absolutely. Overextending on short-term only interest terms, ignoring exit fees when refinancing, not structuring loans under separate entities. One problem, property shouldn't risk the whole portfolio.
Let's talk about structuring for growth. So Sean, let's talk ownership.
So many advanced investors, they'll use trusts or companies. Trusts separate the personal liability from the assets and allow income distribution to family members for tax efficiency, but always get professional advice. The wrong structure can cost thousands later in stamp duty or capital gains tax.
And let's talk about interest rate and timing, Sean. So we have seen rate swings recently. How should investor react?
Yeah, absolutely. Okay, so don't panic. Fix 50% of your loan and keep 50% variable. The balance gives protection and flexibility. Remember, higher rates often cool competition. That's a perfect time to buy from motivated sellers.
And Sean, let's give us any real life scenario.
Yeah, absolutely. So one pops to mind in particular. So one of our clients, if you remember Leanne, she bought 40 acres near Ballan in 2017. She spent $900,000. She financed 55% of that at a variable rate, 45% was fixed. The lease income covered 70% of the repayments. In 2023, the land was valued at $1.8 million. She refinanced, withdrew the $400,000 in equity and purchased another block in Lara. Smart Finance doubled her holdings without the extra cash.
That's a good one. So preparing your finance file, Sean, so what should a buyer prepare before approaching the banks?
Yeah, absolutely. So you want to have 2 years tax returns and BAS, evidence of deposit and savings pattern, your lease agreements, expected income projections, a clear exit or development plan. Banks will fund clarity, not chaos.
That's a good one. So private lenders and creative funding. What if bank says no?
Yeah, well, that's one thing we can always think about. But private lenders bridge the gap. Rates are higher, 8 to 10%, but they move fast and fund land banking that traditional banks don't touch. Use them short term to secure the site, then refinance to mainstream finance once the rezoning or the valuation improves.
Thank you, Sean. So, Sean, can you guide us any government or rural grants?
Yeah, so that's a funny thing, Jatinder. Few people actually know about federal and state grants for water efficiency, solar installations, and also regional development. These can reduce the loan burden and boost return on investment. Check Agriculture Victoria or regional development websites every single quarter.
Good. So cash flow management, once the loan is active, how should investor manage money?
Yeah, so always separate farm income from personal income. Use an offset account for rents or lease payments and direct all expenses through one operating account so you can measure the yield easily.
Yeah.
Treat the farm like a business. Don't treat it like a hobby.
Thank you, Sean. What about tax and exit planning?
Yeah, tax and exit planning. Always plan the exit when you enter. If the land is held under a trust, capital gains tax may be split across beneficiaries. If you intend to subdivide, different GST rules will apply. An experienced accountant will save you tens of thousands of dollars later on.
Thank you, Sean. And the wealth cycle. Summarize the full cycle, Sean.
Absolutely, Jatinder. So buy strategically with manageable debt, lease for income, and refinance against growth. Then you can acquire again and repeat until the portfolio funds new deals.
Okay.
And that's how ordinary families turn one farm into 5 farms within a decade.
Yep. Thank you, Sean. Let's talk about mindset and discipline. Any final mindset advice, Sean?
Yeah, treat debt as a tool. Don't treat it as a trap. Review your numbers monthly and know your interest rate, the LVR and cash buffer at all times. When you respect the numbers, they'll work for you, not against you.
Yep. Thank you, Sean. Thank you everyone for tuning in to the Farm Investment Strategies with Sean Archer for guidance and for on your own farm investment journey. Please contact Sean from Greenfields Real Estate, helping Australian turn land into legacy.